Hey everybody, it's dasPIPS here. Just going live here. We're gonna do a just a little market overview. I'm just gonna try this out, see how people like it. But yeah, it's gonna be kind of fun. We're gonna go over a couple things. We're gonna look over the indices briefly. We'll take a look at where the Treasury yields are at. We'll take a look at the metals market, and some energy in there. See how oil is doing. We'll take a look at the crypto markets as well, just sort of see how it all applies. And then I'm gonna do a quick. We'll do a deep dive here on a couple of the majors. I'm not going to go into any of the crosses or any of the minors there or the exotics. I'm just going to keep it simple to what I know, which is where I focus most part is on the majors. And yeah, so without further ado, why don't we dive in and see what the market's given us for this coming week? So we'll start off looking at the indices. So this is a daily chart for the S&P 500. Essentially, it's the SPX, which is a contract for difference. Anyways, that's what most of us are using for our indice trading. As you can see, we've had a pretty strong swing moving up, and the biggest thing I'll say is that right here is obviously where COVID hit us, right? And then we saw a bunch of market pullbacks, but we were just trucking, up till about mid-September. And then the last half of September, it sort of pulled back a bit. Then we sort of had the same thing. We had a couple strong pullbacks, but since basically mid-October, we've just been like rocketing. Like if we were to zoom this in and have a closer look, you can see the stock market's just been on a tear. And this is quite the uptrend. Last week, we see these 2 down days. That was when the core CPI came out, and inflation is hitting us. I mean, I could dive into that, and we could talk for a while on that one, but just know that inflation is a problem, right? And why? Because they printed a crap ton of money, and couple that with the supply chain issues that we're having, from COVID and everything, and that was big, right? But Friday we saw a big recovery in that, and I think a lot of that's to do with the fact that people are still bullish on this market, and earnings are still coming through, and money's going into these areas, right? It's the same thing. The Dow looks very much the same. You'll see the same thing happening with most of these indices. One here I'll point out, when we look at the NASDAQ, is the same thing, right? NASDAQ's actually got an even steeper climb, and that's basically through all the tech companies are just having massive earnings. They're just doing really, really well. And it doesn't seem to bother anybody. And if we take a look at the VIX, which is the fear index, basically it's volatility, right? It just defines whether or not the market's gonna, if we're gonna see a pullback or if we're gonna see a lot of trading, up or down, right? With it up high, we can still see the market, rally. It just means that lots of movement happens. So when we get up to these big peaks here, like over here, like this here, right? Well, that's COVID, right? Like happening in this area here. That was when COVID hit us, and it is what it is, right? So that being said, the VIX is down around 16, which is a good number for us, which means we generally have a good strong market. Everything trends nicely. This is the U.S. government 10-year bond, the blue line. Okay, so this is the value of it, right? So it's $1.20. It's not $1.28. It's actually your yield you're going to get back out of it is 1.28% a year. So essentially what they're saying is that in 10 years, you'll have made 1.28% of a return off of that Treasury bond if you bought it, right? So you buy a government bond and it guarantees you it's going to pay out this much. And that's sort of what you're seeing on a 10-year right now. Well, if you look at where things have been at, this is sort of where COVID started, right? And we saw the stock market starting to pull down. Then this is the dividend yields, because all the companies said we're not going to be paying any dividends because we don't think we're going to make any money, right? So you can see how now the 10-year, everybody jumped into it. Everybody was buying bonds, so their value went up, right? They were getting more, they're getting a bigger return on it. But your dividends, you're not getting the money back, right? You buy and hold a stock, you're not going to get your dividend payment, which is basically when they make profits, they dispense a dividend, say, hey, we made a bunch of money, we'll pay you dividends. So that dropped off, and then so everybody moved into the bond market. And then you can see here, this is in February this year when, things were starting to get better. We had vaccines, everybody was happy. It dipped a bit over the summer, right, when we started to see things coming back. But, in September, we had that rally in the stock market. Companies are doing better. Earnings started to really hit. And now you see that the Treasury bond market's starting to drop off. One of the reasons why you're seeing this decline over here is because the Fed announced tapering. You all heard about tapering, right? Tapering is essentially the Fed's buying the bonds instead of the actual, instead of like companies or people or other countries buying them, right? And why is that? Because it's down. It's like 128, right? Like it's been historically sat around the almost 2%, but since COVID, we've dropped right out of that. So where would you rather put your money, in the stock market, or would you put it in Treasury yields, right? So when that yield market's down, nobody wants to buy these bonds. You want to pay for infrastructure, you want to pay for government spending. That's how the government's making their money. They're selling bonds and saying, hey, give me money and I'll give you back 1.25% on it. Well, if I can make, what is it, the Treasury, or sorry, I'm going to make more than that right now. I'm going to make 1.5 in the stock market, just on the dividend yields, let alone the fact that I'm carrying that, I'm getting the gains from the stock increasing in value, right? So as a store of money, you're starting to see the bond market's really tipping off. So to take a look at what that looks like with the bond market, this is the Treasury yield curve, essentially. So, the blues, this is the 30, this is the 10-year bond, this is a 5-year, and then the 2-year. A guy named Patrick Kenny, he one of the guys we've traded with, and he was back here where he started to notice. This is what they say happens when the yield curve starts to flatten. That's when we get worried. Because if I let me go here to a weekly chart. Okay, so on the weekly charts, you see right here 2007, right here 2006. This was right at the beginning of when the housing crisis happened, right? The yields flattened, the curve. So they're saying there's like a curve. If you were to draw this as a line, it'd be really steep, right? But when it starts to flatten, that means when the 1 year starts to come a lot closer to the long-term yield, right? That's when problems start to happen, because that means people don't think we're going to be paying that much out long-term, right? So when that inverts, like it did over here, you can see how the 2 is worth more than the 5, right? Like that's not supposed to happen. So when that starts to happen, when this red one starts to be above the yellow, that's telling you they don't think things are looking too rosy coming up, right? And sure enough, that's what happened, right? This is right before COVID. And it wasn't necessarily strictly due to COVID. There was other things that were going on in the world. But when it hit, and it just tanked, right? And you saw it really right here, right? You saw it happening all along. So what I'd like to point out to everybody is that the yield curve here, it's unflattened. Now it's a nice curve. We're back to where things should be at. But look at this area here, right? The top end of the curve is starting to come together, right? We're looking like the 5 to 10 year, it's starting to flatten a bit. So that's not a good thing when these start coming back together. When they start coming in, so it'll be interesting to watch. 2 years, I'm going to get maybe 0.5% a year. What's inflation right now? It's like 6%, something like that. That's insane. So like you're losing money if you put your money into a bond yield. So nobody's buying these except for the Fed, and they want to start tapering them. So if the Fed stops buying these and nobody else is buying them, that means nobody's getting tax revenue out of this, or not tax revenue, but getting revenue from this to be able to pay to do things that they want to do in the market. And that's just the crazy part. So it's definitely something for us to keep an eye on. Right, so let's take a look and see what's happening with gold. As you can see, imagine this, gold is rallying, right? And why is gold rallying right now? Because, man, everybody's worried about inflation. Inflation means your dollar isn't worth as much. Not so much it's not worth as much as the buying power is not there. So, we're looking for places to, stores of value. Where are we going to stick our money right now to get the, to keep the value? Because it's costing us more to buy things. That means the dollar's not worth as much. And inflation is a part of a problem. The other part of the problem is workers, right? It's like the cost, like a lot of people I know are from the the hospitality industry, right? And within that hospitality industry, the service industry, right, it's hard to find workers right now, right? So because there wasn't a lot of jobs, a lot of them went and found jobs elsewhere. So without that, we're that's another pressure, right? So now they're going to come back and be like, man, it cost me like $5 for milk now instead of $2. It's big. So people are looking for places to put their money, right? So where are they sticking them? Into metals. Look at the gold market, right? Come up here, right? Everybody's starting to worry, right? Like it really rallied during COVID, right? But when everybody thought everything, okay, it looks like we're coming out, things are getting better, it started to come down, right? Then back in April, it kind of spiked up a bit. We got the vaccine back, and now it sort of came down a bit because stock market's been rallying this whole time, right? So, but now that, there's worries about inflation, we've seen this snap up. So, if you ask my opinion when it comes to the price of gold right now, I'm looking, there's a couple things I'm looking at right now. And that is that I think we can come back up into this range here. There's definitely what a friend of mine or someone I used to always pay a lot of attention to, right? Like we've got low resistance highs here, right? They're almost equal, but they're low resistance because this one's a little bit lower, right? Then you got here, right? You got all these traders that were hoping that this was going to go up, right? They came in, it double bottomed over here, kind of, right? And so then they took this trade, they got up there, they got stuck, right? Same thing, came down, rallied back up. People bought thinking that maybe we were going to pass this high. Nope, pulled back, right? So there's a lot of liquidity up in this area. I'd say there's definitely potential. You got people looking to store their money because treasury yields are going away. The bond market sucks, so they're going to put their money over here as a hedge against the fact that we've got all this inflation. Taking a look at the silver market, same thing. You can see silver's rallying, right? Like silver was cheap. I remember when we were being told, like I remember looking at this when Patrick was going on, and like it was 28. Silver is definitely a deal right now. If you were buying silver down over here while it was really cheap, these were definitely the spots to buy. And you can see this is holding a value right in this area. So keep your eye out for that. But I could see it, rallying up to 28, 29 without a doubt. Oil is not going to get cheaper. I don't know if you guys have heard, but OPEC, like Biden's like, please produce more oil so that we can get it for less because everything's costing us so much. Yeah, you're screwed. OPEC isn't gonna do that. We're going into the winter season. Natural gas is going to be worth money, and since the U.S. isn't really doing a lot of their own oil production, they're relying on the Saudis. They're stuck with dealing with OPEC and what OPEC wants to charge. So I see this area up here getting snapped. I can see $100 oil coming. It's going to happen. Demand is going to go up. People are going to have to heat their homes, right? Drive their cars. We need to eliminate this supply chain problem. And part of eliminating that supply chain problem is going to be driving trucks. And Tesla trucks ain't going to be out fast enough. Plus, you're going to have to burn a bunch of oil to generate the electricity or coal or whatever, right? Like the energy industry's not going anywhere, and their value's going up. Another place that people are looking at that's a store value is, obviously Bitcoin is just been crazy. Everyone was scared this summer. Everybody. Oh, it crashed. Oh no, look at this. It's bearish. We're gonna try. It ain't going anywhere. And look at this rally. Like, if anybody was able to put past their fear this summer that like crypto was gonna go away, I just can't even, like, if you didn't buy while it was down here, like, trust me, I'm kicking myself. If I'd had more liquidity, I would have had money in it. But that's 142% since July when it was really cheap. I had lines on, it's on another layout, but I had lines actually in this area with alerts, and they went off, and I was looking at it, and I just didn't have the extra cash at the time to dump into it. I would have dumped. And if you'd held it, like, you could have held it up to this point, and when it came back to here, gotten out, that would have been a 63% gain, right? You see it come back into this area here. Don't be scared. It's another 60. Like, this is crazy. Ethereum stretching even higher. I called this one at the early to mid-October, and I said we were going to see new highs in Bitcoin and Ethereum. And a lot of the reasons I was saying that is because they both have ETFs starting. You've got the Fed, you've got the SEC, you've got the governments allowing it, they gave it credibility. Regulation is the best thing for cryptos. The best thing. And the reason why I say that is because it gives its legitimacy. If they want to tax it, if they want to regulate it, it's because they're scared and they actually know that it is a store of value because people believe that. That is just the fact. You want to put your money in something, wait for Ethereum to come back. Ethereum's got to come back and test this area, I believe. Come back down here, maybe do a little bit here before it does its next big pull. Or who knows, maybe it just lifts off. But I'm going to wait for discount. I'm going to wait for it to come back to this area. I mean, you've got this big run. I can easily just quickly draw you, like, you know, from this pull here, you know, up to this high, right? Like, you know, you wait for it to come right back here, right? That's like below 382, but I really think this is the area. There is a lot of volume in this area, so it's very likely we're going to come back, retest this section, and then go up. And this, you know, I'm putting it on that high, but I'll bet you it comes into this range here, right in the middle, right? This is what it's supported off to get up and out of this zone. So, you know, you get back under 4,000, Ethereum's a buy. That's my opinion. Don't take it. It's not financial advice. I'm just saying that's my opinion. Nothing I'm saying today here you should take as financial advice. I'm just a guy giving an opinion on what I see happening here. All right. Well, we were going to say I was going to talk about Forex, so let's do some Forex stuff here. So if we go take a look here, this is our market calendar for the week. And you can see we're going to have some big Japanese news here. Their GDP, their growth rate, that's over here. So, you know, GDP's basically is a good indicator as to what's going on with their economy. And keep in mind that GDP is what drives the value of the dollar. Because while the dollar is created out of debt, what's backing that debt is the ability of the country to produce things that they can sell, because if they can sell that, they can make revenue on the sales of it, they make money on the tax, they make money on taxing people's income because they're working to do that. Once you get all that, boom, there you go. Now you've got your tax revenue. So that's what gives it strength. So like it says here, right? A higher than expected figure should be seen as bullish for the JPY, while lower than expected figure would be seen as a bearish sign for the JPY. So that'll, you know, that's what's going to apply to, you know, USD JPY. So that's something we need to keep an eye on. Obviously, you know, the previous was 0.5. They had negative 0.2 is what they think it's going to be. So if it can be like anything higher than a negative 0.2% on their GDP quarter over quarter, that's going to be a good thing for the Japanese yen. So, and then tomorrow, right? So you've got the euro balance of trade tomorrow. That'll be something, but you know, it's going to be this guy's speech. So keep an ear out on what's going on with that. But the biggest one is going to be in the pound. I'd be waiting to enter on anything on the pound until we see what happens. This is essentially their non-farm payrolls. This is all the employment changes. So if we click on this, you can see here that, yes, thank you. You can see that it's been flatlining, right? So the last two reports have been bang on, and you're seeing their unemployment rate dropping down. So that's a good thing. So if that continues for the pound, so we want to see a lower number on that one. So, and then, you know, GDP and employment change for the euro. It's gonna be a crazy day. Tuesday is insane. And then look at this. On the same day, within hours, right? So this is all going on at the beginning of the London session, right? Is going to be employment changes. You got France has got their inflation rate announcement. We've got GDP for the euro. You've got oil market, euro inflation. That's Italian, right? But it all affects the euro, right? So there's going to be massive moves in the market, I predict, on that day. And then you've got all this export and import prices month over month, retail sales. But it's going to be these retail sales here are going to be a big indicator for the U.S. market. And also, you know, we've got some Fed speak. We've got Lagarde speaking. Like, these guys are overlapping almost. So it's going to be a lot of things moving. But yeah, I'd say it's going to be an interesting day, and then add in some JPY. So things will be really going. And then on the next day, you're going to have your core inflation rates for the pound. It's this is going to be a good week. I think we're going to see a lot of volatility in the Forex markets. That's for sure. So let's pop over here to the charts here. Okay. Just hang on a sec here. I just need to do something. I got a little something going on in the background here that doesn't seem to be doing what it's supposed to. Interesting. Oh, right then. Fine. We're gonna do it this way. Do it manually. Yeah, all right, so just something a little out of sync there on my OBS. So yeah, so if we take a look here, you can see over on the dailies here for all the indices here, or sorry, not the indices, but the major pairs. You got the pound here that's sort of in definitely, that's a downtrend. You got the euro, that thing's in a downtrend. USD CAD, let me tell you, Canadian dollar, like we announced that we were, our basically our Bank of Canada basically said, yeah, we're going to stop it. We're stopping the bleeding. We're going to do what we can. And that's why you can see that they're definitely rallying against the American dollar, right? So when you see GU and EU here, like you see all these country first USD pairs, which are the top four, meaning the pound is first and the euro is first and the Aussie. That means that, when that's going down, all right, that's value of the US dollar is going up, right? So the euro's weak, the pound's weak, the Aussie and the New Zealand, they're sort of weak on this trend right now, right? Whereas you can see, the JPY is sort of sitting there. It's been a little bullish. So now if I was to pull up here just to give some reference, because I don't really trade the dollar, so or not the Canadian dollar, that is. So you can see here that that the dollar is definitely showing strength, and that's why everybody else is dropping against it. So, alrighty. So let's dive into let's look at the dollar here first. I always start on a daily chart. So as you can see, we sort of, US dollar sort of snapped its streak here back in June. And this is basically when, vaccines started, the economy started opening up, and we had this huge rally. And it's just been rallying this whole time, right? These are standard little pullbacks that we're getting, right? That's normal price action, but this thing is definitely bullish, right? And you can see that over the last week here, right? Because these are daily candles, right? Last week it was trailing down, and then bam, like boom, CPI was up, inflation was up, so there was some value into the dollar, right? So it just shot. I really liked it. So it seems like when you see yields go down, okay, we're gonna see the Dixie, sort of doing a different dance. Let's just for fun, I wish to compare. So let's go US 10Y. Right? So the 10-year was actually going up while this was happening. So let's just make this thing look a little more. Oops. That's why. Hang on. Below. There we go. Right? So you can see here, there's a little bit of correlation, but not a lot. But you can see that we were really pounding up. And so with that 10-year rising a bit there with the core inflation, because really what this means, that inflation means, is that the Fed's going to have to add interest rates in, right? You add interest rates in, that's going to make, things... the bond's more valuable, hence the bond's more valuable. People are going to buy it. They're putting money into US dollars. US dollar value goes up, makes it strong. So yeah, so that's sort of my view on that there. So let's take a look here. Let's go down to the 4-hour chart. Right, so you can see massive rally last week. and it's kind of flat here, like it is generally on the weekends. So let's go. What's going on here? Yes. Okay, so let's drop in an indicator here, which is going to be, where is it? London Open. There we go. And I want weekend Saturday, Sunday. There we go. So as you can see on here, right, the yellow line there, that's your weekend break. So this is the Sunday. So you can see it was a slower day on Friday, and so tapered a little bit. But you know, we've seen this big rally. I'll be interested to see what happens with the news we get this week. That's going to be that's definitely going to be a fun part of things. But you know, we've had this massive rally. We took out a bunch of you know, you could look at it as we're just taking out liquidity, but we're making new highs all over the place. Look at the session breaks here. So, but we're on a bullish. We're pulling. So as we go down to the 60, go down to the 1 hour time frame, I just want to point something out here. We had this big run here, and for the most part, let's take a look at how this price action laid out. So I see like maybe two spots here where we had a little bit of, like, there is a right, there's a little bit of so like in this area here, there's a tiny bit of an imbalance, but you know, this is some pretty clean price action. Oh, look at right here. That's another good spot. These are areas where price just runs too fast through it. And what that means is that in this area here, there's orders trapped in here, right? And so those orders, they got to come back to them at some point. So they just move too fast, right? When you get these big, strong moves, they tend to leave a little bit of actually, that's not great. I should have done this. There we go. So you can drive a Mack truck through some of these spots here. I know I have. It's great. It gives a good opportunity, right? So you got some imbalance in price there. So if I was to look at this here, I'd say that, you know, there's targets for, could definitely get back to the 94.6 and 94.7 there. If I look in this area here, you know, your 8s, I think 8s and 20s, whole levels, and also your halves are there too, right? But if you look in this range here, right, this thing pivoted right around that right around the 294.2 area, right? I can see us coming back down in this area. So, you know, if I just mark my chart out, this is where I think, you know, we can see the dollar coming back to. We'll wait and see what happens. This is the opportunity, right? So if we get some news that's not so great over the next week here, all it takes is like someone to say something in one of those speeches, and this thing's just gonna like fall, or it's gonna go up. And if we take a look at price action a little closer to the time frame we're at right now, this area here is very attractive to me as well, right? It came up here, they came down, they pulled out of this range, but like, this is one of the setups I really like to see. But this isn't a tradable setup, so I'm not gonna. We just need to know that there is some liquidity available here. So just keep that in mind. All right. So as we move along here, I'm gonna go take a look at. Let's look at the pound. I'm gonna go back to that daily chart level here. What's going on? Oh, yeah, that's right. All right. So I was looking at this the other day, and it's interesting what we got going on here. So, oh yeah, it's just on small time. So over here we've got a lot of choppy price action, and if we look at this in history, you can see this is a big pivot point. And when I say a pivot point, I mean, like, if you look at it, right, price came up, rallied through here, bounced, went all the way up here, hung around in this area, which is an area it was happy at, but then it fell here right as we started to come into COVID. And this was a key spot where it fell, right? It fell out of this price zone. And now it's dropping down, and it's continued dropping down, came all the way down to here, which this is another area of a bit of a You know, I could say you could draw, there's a price zone here, right? Let me see if I can get a better template. Yeah. I'm going to change this fill a bit here so it's a little more visible over there. Yeah, so you see there's like a price zone in here. There was a support, right? It's come in, it's touched off of those areas, right? And basically tried to hold and pivoted out of there. We call it, people call them support and resistance lines. I tend not to like to, I mean, they work, but there's other things to look at. We don't trade off them. We just need to know that these are levels that they're going to fall through, right? So this is a key spot. And it's touched off of this area that's 134, 135. And so if we look over here and we look at sort of this price action over here, I generally really like setups inside of where I have what I call an institutional candle. And this is bounce back, guys. I'm going to shout out John Phibbs on this one here. But, you know, you see a big push down followed by a massive up push. And when you have this candle within the body of that rush up and that imbalance in price, it came back and it tested off this area and then ran, right? And then it just kept happening, right? Did again here. And you just see it run away, right? So I see this as an area where we could get, you know, a run out of here. So let's look at the 240. 4-hour chart, right? It's the same thing, right? We're coming down this area. Now, I'm going to turn on my I'm on the wrong one, that's why. My apologies. I'm doing this off the wrong chart. I should be on this chart here. All right, there we go. There's the 2. Let's go to the 4-hour. So on the 4-hour here, you can see we're in a downtrend, right? Like if we were to take a look and say, okay, what has been happening over the last half of the year? It's down. We've been trending down on GU. Okay. So if I take a look at, like, you know, the last 3 months, we've just been creating a new low, a new lower low, and now we've created another lower low. So the key for this to get out of here is we got to set and hold off of this level here. Now, I was talking about imbalance and price action. So as I'm watching the chart here, you'll see I've got some setups here. I'm going to get rid of that. But essentially, I'm taking a look. This is the last swing down in price, right? So if I look at the prior swing down, you know, the nice thing about Forex is that it tends to be cyclical. So we can generally predict with relative certainty at least what the moves would look like, right? So if I take a look and I just draw, you know, these last ranges, right? You can see in here, right? So if I go to that previous high, which is actually over here, right? So if I swing this over, right? Right? This one here, was rather weak. It only came back to the 382. Didn't really pull a lot. And you can see that we have that imbalance in price I like to talk about. Right? So if I draw out this price imbalance, which is basically, you see how I got the last wick on this candle, and I got the one over here. That's where my box is. Let's expand this out a little further so it's easier to see. You see how there's this gap here, right? Price just flew through here. And even if I go to, just for, you know, the ability to illustrate it, you can narrow this down to make this box smaller as you go down to smaller time frames, which can sort of narrow things into the area you're looking at. But price didn't go up and down a whole lot in this area. Let's just go even further. We'll get crazier. We'll go all the way down to the 15-minute chart, right? But if you take a look at this, right? So we had, you know, basically a rally. There was some stuff there. So I'd probably say that I would move this down to like there. right? This is narrowing that target down, right? Plus you can also drive it out over to here and see, and this is the magic, right? This is, it blew right through this zone, and it'd likely come back and mitigate out of that. So I call that incomplete. I also see that you've got somewhat of like, you know, some equal highs left back here. And that falls right just almost to the 618. So I'd let that sucker come to the 618. Anyways, let's go back over here. So the 1 hour. So that's what I was saying, right? So I'm going to leave that there. I'm going to get rid of that fib retrace, right? And take a look at this fib, right? Boom, comes in, smacks off of what? Came right into this imbalance zone and whacked off of the green ones at 618. Boom. Right? Now let's take a look at our latest price action, right? We've come back. We only come up to the 2 here. And in this range here, I see some imbalance over here. And this flat area here, you know, there is orders trapped in here, right? There is orders trapped in there. And those orders are, it's like, what do they guys like to do? They like to put like the dollar sign up there, right? Bango. There's people trapped there with orders, stop losses, etc., right? Even up at this area here, but big time here, right? So if we draw the fib, right, it's deeper than the 781, but I could see us coming into this area before we fall, or we just keep growing. So I'm definitely, if we see good news, this thing will shoot for the moon. We'll moon up to this area. I hate using that term. It's like Lambo money. Where Lambo? I bought crypto. Where Lambo? You know, that's a 1.5% move, but that 1.5% is 200 pips. So there's a move here, and I'll bet you it happens when they announce the pound's unemployment data. It's definitely got an opportunity. You can see this thing can move that far in a day, right? We move this like how far did we move here? Dang, that was 150 pips right there. So there's money to be made off of this possible move. And there is imbalance in this, right? Like, just take a look at that, right? There's imbalance in there. So, you know, I look at this and I go, with the 618 right in the middle here, I could see it mitigating out of this area here. Like coming up, bouncing off this and falling. If it supports off that, then it carries on. But this is an area where, you know, we can come up. Maybe there's some lost orders up here that people need to come and get. So, but that's my deal on GU. I like to talk a lot, but that's where I see it. This is my golden zone. I'd say wait and see what happens. You can, you know, I don't know. We'll see what happens when the market opens. Is it open right now? Oh, yeah, it is open. But we'll see what happens at London. But I'd say, you know, if I was to plant I'd be looking at this. I'd say if I see price come to here, you rock a little, you can keep yourself tight. You know, just below this low here. Keep the entry right on that candle. And then you can target up to like this 618 area potentially. Right? And I do actually, because we've got kind of a low resistance. Again, low resistance highs here, right? Right, sitting like here. We target there for a TP1. Anyway, not saying, but saying. And then you can look and see, right? If it bounces off of this and decides to come back, boom, set yourself up as a sell. So that's what I'd be thinking about. All right, let's take a look at the euro, because they've got big news as well. And very similar, right? We've got this whole zone here where you can drive a Mack truck through. But you see, the euro, oh, this is good. I actually didn't think about this. But we'll continue talking about the euro. Euro's in the same boat, so let's go to the daily. Right, same thing. The euro's trucking down. The euro just blasted through this area of imbalance, right? It's come down, and now it's touching off of this. So if it comes down much further, it's going to slow down into this area. what I sort of said, there's some imbalance in price in this area here I've marked up. But I think we mitigate out of here, and this looks really good on the daily. Like that's another one of those, you know, big whales, the banks, shoved this price down into here, cleared out some imbalance here, and then they just tore off with the price, and it just ran. Like, what is that? 1, 2, 3, 4, 5, 6, 7 fat up days. That's like 2 weeks straight of growth, right? And it just ran up into this range here, and then it's just not staying, but it's dropped. It's fallen, right? Americans are getting some strength. So if the Americans stay strong with their dollar, you know, if the American dollar stays strong, then, you know, it's likely it pivots off of this. But I think we're going to see, depending on how that news runs in this area here, we'll see something happen. So let's pop down here. Let's go look at the 4-hour chart. Right? Same thing I was saying, right? We've got a lot of imbalanced price action right here. Right at the beginning of the month, it was just falling down. Sorry, last week. Right? That's the 10th. Let's get rid of this Saturday, Sunday thing's not working out so good on this chart, but you know, that's a lot of down days. Now, if I take a closer look at this and we jump down to this, because I just want to point out, there is like, you know, imbalance up here. There's equal highs, low resistance highs here as well. So that could be an area, but I see this bouncing and going up. How far down is it going to go? I don't know. We got this news happening, right? You got that. You got this. Like this is going to be a busy week. We're going to see markets move and start moving as soon as Tuesday. So it's going to be a good week, but wait and see what happens on Monday, and then prepare for your move on Tuesday. So we're going to go down to the 60-minute chart. This is where we start to see sort of how things are trending. But man, just look at that. This area, there's a lot in this area. And if you look at where this wick came to and this wick came to, they're all in line with like some price action over here. Like, look at it. They've been reaching into this zone a bunch of times. So I'm expecting to see, you know, it couldn't hold that level, so it just fell, right? They cleaned up this price action, right? Because this candle went all the way down, came back up to here, right? We didn't wick up past there. We just kept falling. So we've trapped some orders in this area here. And it looks like that one there, not so much. But I mean, like, I just look at it like this. Like, there is, you know, boom, right? You've got money sitting up over here, right? People were trying to get long in this area, and they just kept getting pulled down further and further. So, you know, there's also, if we look at this, right, there's low resistance highs were here, but they took them out here. And this big long wick up here, coming back up into this zone, I really think that this thing wants to reach lower. Like, they've got, you know, there's an area to come down to here. They kind of took out, but I mean, like, look at how flat. Like, it's creating quite the support line. So we'll see if it can hold. We'll see what happens with the news. But I'd be looking around the 113.8 to 114 whole level. Like, we're coming into some big ones, right? I could see a pivot off of the 2 or off of the 4 even. Those would be areas I'd be looking to get long. So, I mean, just look at how it's just supported. Like, they're reaching down there. They're a little farther here. But seeing this reject going up higher, that really tells me that, you know, I'm not sure they came up here and grabbed some orders. I think they're getting ready to go down longer. I think this thing drops. That's my belief anyways. I think we'll see the dollar jump a bit this week, and it could go even further on that news. And if news is surprising coming out for either euro or the pound, like, it could be big. Really could be big. So I'm trying to think, when was NFP last month? I want to show you guys something on the, let me just take a look here and see where it is. When is NFP? I thought we just had it, Let's go next week. We got there. Huh. I don't know why, but it won't let me go far enough forward to see that. I wanted to have a closer look and see what... yeah, it's not going to let me do that. So let me go over to Forex Factory. And here, sorry, you guys should be able to see what I'm looking at. All right, let's have a look here. Where is it? Let's see here. I want to go previous week. Before that. What was NFP? There it was. So that was on, was it USD? Yeah. So we want to look at the 6th. That's what I'm trying to do. So let's go over here. So if I go to the 6th, November 6th, November 6th. Here we go. So this is what I want to show you guys. We're going to go to like, let's go on to the 15-minute chart. Right here. So if I take a look at this, just like these news events are always interesting to see what happens. But you know, the news happened right in here. Okay. So if I take this replay tool, right, and I stick it there, and we take a look at this and we go, all right, we've been banging around these two ranges like this, right? That's the range that it was in, right? We came down, we snapped out the money that was sitting over there at that. So there's a range here, right? So let's just draw some lines here just to have a quick see. Why didn't you place? Let's just move that one down here. Right? So you got some stuff happening there, right? Let me go down to a 60 quickly. Right? See how it's hanging off of that? That's actually like a really key spot. Look at how it hits all these lows over here, right? So there's a key level it came down to. All right. So let's just play it out, right? Let's see how it plays. If I was to look at this, I go, there's low resistance highs here. And I'm not even, don't want to even go too far, but I'm just going to say, we had two options for what could happen here. We come and take stuff here, or we come down here and fall even farther, right? Oh my goodness. Unemployment rates, right? So I run this guy, I let this guy play out. Right? Look at that. Okay, so boom. Right? It's the day before. There we go. Pause it and let's go, right? So here it runs. Right? See that? So here we go. It's right over there. So it had to run the day before, right? But it came down, it stabbed out this. That's interesting. Right? Then it comes down and just keeps going. Like this is where they find out, right? And then it spikes. I always find it seems to go out one side of the box, right? And then rams the other direction, right? And then you go into the weekend. So that was Sunday, and then that's Monday the next week. But this move here, take a look at that, right? They were going to go up and get this area, but they came down here, and they took out all of this and all of this. But once it spiked down and reversed, like, this was the entry. You see it come back. It didn't want to break. It bounced off of this candle here. I generally would set up my setups similar to that, right? You wait for the move, right? It telegraphs by coming out of the bottom of the box, right? And target would have been the top of the box. So depending on how long you're willing to wait, right? I wouldn't have waited into the weekend, I'll tell you that much. So, as long as I went to there. Yeah. So it came in here, but it snapped. I probably went too high with that. Right? That's more the equal high versus equal high, right? But it snapped right past it. Even if you were to say, yeah, okay, we're going to go here. I'd be watching it, right? But like, that was quick. That was how long was this trade? This trade lasted what? How many bars? So that's what? From 7:45. You're out of it by 10:30. Just saying. Make a quick 50 pips off the news. But it's volatile. You gotta be patient. You don't go down to the 1 minute and look at it on the one. You look at the overall play, right? So if I'm looking in this range here and we're coming into news this week, I'm gonna wait and see what it develops over here. But what I want to know and what I see here, right, is that these guys have cleared out above and below. Above and below. So if I was drawing this range here, right, from here to here, right? Like if I was to take into the consolidation we had there and the previous area high, right? Like it reached all the way up and took out the last order out of this candle area here. So this is like a crapshoot for, it could go anyway. You know, I can show you like a couple other things here I'm seeing. If I was to look at this, I'd also point out that, you know, we've got this happening. Right? Okay, so let's get some better coloring. Let's do. I hate using bright ones, we use yellow. Okay. So we've got this. Right? It's somewhat flagging. Right? So you can see that it's definitely, there's a little bit of up here, but there's a whole lot more down, and we're creating more of a flat spot. Like if we were to go to candle bodies, I do it like that. That's what I see here. And generally the cleaner side is a side that's going to clear out. So even though they took out some stuff here, and we still got all this money sitting up here, there is a lot of clean price action here. I don't see a reason to come all the way up there necessarily. I mean, there's definitely something here, but it's a little high resistance because they've kind of come up to there, right? So there is the potential that it could come down and bounce off of this line here. There's definitely money sitting under there. Bang. Money sitting under there. So this thing could spike out. It could spike down. So if I was playing this, I'd maybe look at this punch candle. I know some guys used to call it punch candle. It came down, chopped a bit to get in and out, and then fell out. But a lot of stuff happened here. And this is a big, tall wick coming up to here. I think we could see down. If this level doesn't hold, then this thing's coming out. And it'll go north. So wait and see what the price action happens this week. Anyways, that's gonna be it for me. I think I've been talking on here for gosh, I don't know how long. I haven't even checked. Just rambling. I hope you guys had a good time. I'm looking to do some more of these. Let me know if you guys liked it. Give me a like or a comment below. Hit me with the subscribe button. But yeah, I'm gonna let you guys roll. Enjoy the rest of your Sunday. I think I got groceries coming in the front door. My fiance is gonna be like, "What the hell are you doing?" Anyways, guys, I'm Damo. That's me. That's what I do. I hope you guys have fun with it. Enjoy. Stay safe. Don't over risk. Don't over leverage. And enjoy. Talk at you later.